Welcome to the Tim and Nancy Danter YouTube channel. My name is Tim Danter, and today we're going to be joined by Candace Mountain in part one of a two-part series talking about crypto and taxes. Of course, we're going to talk about crypto and taxes, what they are, and also delve into the difference between whether your coins are qualified as a business income or a capital gains, talk about airdrops, staking, and interest. And last but not least, developing a crypto spreadsheet if you are so inclined to manually track all of your coins and all of your transactions. Now, having said that, this is not financial advice, and we do really sort of encourage you to do your own diligence and tax and check with your local tax codes and so on and so forth. This is going to, by doing this, this is going to help you with your yearly tax remittances and also help anyone who's doing your accounting services or your tax services for you at the end of the year. Now, we have found a couple of apps that help you track your movement with coins for tax filing. One is the Coin Tracker, and the other is KOINLY, which you will find in the description below. Remember that Candace's channel on YouTube is The Financial Brew. Her Twitter account is at Candace Mountain, which we have also listed below. We hope you enjoy part one of crypto and taxes, and I'll be back at the end to do a wrap up. So Candace, without further ado, I'm going to add your desktop here.
Okay,
And
perfect.
wow, look at that. It worked.
It did. All that work to make that funky little half Bitcoin.
So everybody, this is going to be a segment on crypto taxes in Canada with Candace Mountain. We are honored to have her do this for us and get a better understanding because tax time is kind of around the corner, and we need to understand what we can and cannot do. This is not financial advice. This is simply the opinion of our chat this evening, and basically do with it what you will, but it is some really good information. Candace, take it away.
Oh, absolutely. And it may not be financial advice. It's also not technically tax advice. So you always want to see a professional in the end. The object here is to give you the information so that you are prepared when you do take your taxes in, to be able to have an intelligent conversation, or considering crypto is fairly new, you might even have to educate your tax person. So anyway, let's get started here with crypto taxes in Canada. All right. So the first key point is that cryptocurrencies, well, they're not treated as legal tender yet. Now, of course, they are in El Salvador, but this is not El Salvador taxes or crypto taxes in El Salvador. So they are considered a digital asset. So in reality, the tax code actually looks at them as being more of a commodity than anything else. So the Income Tax Act will basically say, this is like gold, and we're going to treat it tax-wise very much the same way they would treat gold. All right. Now, one of the key points, and we touched on this when we actually did the live stream, is that your crypto is either going to be treated as a business income or a capital gain. These are totally different, and it's really important to understand which one it's going to be, because there are huge tax ramifications of either of these. Thus, as I said before, it is incredibly important to know the difference. Let's talk a little bit about how we figure them apart. So what makes business income and what makes a capital gain? So with business income, there's basically 4 signs that your income is a business income, and we'll break these down here for you. So the first is that you're using your crypto for commercial reasons in a commercially viable way. This would be something like exchanges are a really great example of that, where they're selling and buying and converting crypto. That's what they do. That's how they make their living. So that, of course, would be a business income. Now, most of you are probably not acting as exchanges, so you don't have to worry about that. The second is that you conduct in a business-like manner. So that may, of course, include having a business plan, also having assets or inventory. So a good example of this is miners. So if you are a miner with actual equipment and that's what you're doing, and you're pulling in a lot of coin, that is going to be a business income. Simple as that. Now, the third is that you're promoting a product or service this is almost in the retail sector. Like if you were a retail sector and you're accepting Bitcoin for payment, then that would be considered a business income. And last but not least, and this is the one that will affect most of us. So you intend to make a profit, even if you are unlikely to do so in the short term. So we're looking mostly, in this case, we're looking at frequent trading, which is basically the same as day trading. So if you're taking your crypto and you're buying it, and you're doing all of these quick swing trades, you're getting in, you're getting some profit, you're getting out. Well, these are business incomes. They're not capital gains. So it's kind of an interesting thing. So why is this important though? We kind of have to ask that. Now, the reason that it's important is that there's different tax amounts on the different types. So business income, for example, is 100% taxable income, while capital gains, you're only being taxed on 50% of what you make. So that's why it's really, really important. And when you're dealing with the CRA, they're going to be kind of diligent on this because they would rather have the 100% if it's something that is a business income opposed to the 50%. So they may look hard at you, and that's just the reality. So if you're getting this straight as you're going, you're going to have less of an issue when it does come tax time. So here's the thing: longer hold for investment purposes, they fall under capital gains. And as I mentioned, swing trading is your business income. So if you're buying, for example, Bitcoin, and you're holding it for years and you're just letting it grow, it's absolutely 100% a capital gain. Not an issue at all. A lot of times, though, those Bitcoin holders will dabble in the altcoins to try to make some fast money to buy more Bitcoin. All of that fast money, that's a business income. You're paying 100% on that. So I know it's probably not what you want to hear, but it's how it is. And even as a business income, you're still making incredible profits. So there really isn't a lot of room to complain. The government always is going to have their share of the pie. So there's a few interesting exceptions: airdrops, staking, and of course, interest. So an airdrop is simply, a lot of times, especially with newer coins, they may drop some coins for free. And the reason they do that is, well, to get people interested, to get some hype going on the coins, hopefully get people talking about them on social media, and that then generates people's overall interest, and it also makes the market want to buy these coins more. So how an airdrop is handled is it's handled as a $0 commodity. So when you get an airdrop, you calculate it at $0. And then when you sell it, that means that you are selling it for, if you sold it for, let's say, $50 a year later, I said a year, so that's probably going to be a capital gain in that case. So you would then be paying tax on $25 of that. And I'm going to show you a little place where that zero can come into in a little bit here once we get to the math part of this. I promise to keep the math as easy as possible, though, because I know sometimes that scares people away. All right, so staking rewards, they're also calculated at a cost of $0 when determining business or capital gains. And I'll tell you right now, that is actually a really good deal. And the reason that's a really good deal is that staking feels a lot like getting interest, and you're not getting interest. You're actually being rewarded for the work that you're doing, because proof of stake coins, staking is pretty much sort of their version of mining. So, that's not a bad deal. Now, interest, though, if you have an exchange that pays you like 6% interest for, just parking your Bitcoin there, that's 100% taxable income. So that's why staking, trust me, if you ever have the option between interest and staking, go with the staking. You're not going to pay as much tax. So it makes a lot more sense to do that. Okay. So now we're going to talk a little bit about your crypto spreadsheet. So your crypto spreadsheet is a spreadsheet you should be maintaining throughout the entire year, keeping track of everything that you may need for the CRA. Not all of this information is going on to your actual returns, but if you get audited, this information will be a lifesaver. And trust me, when the CRA, just for whatever reason, sometimes they'll even do a random audit, they will ask you for crazy information. So it's best to have this and keep it, hold it for 7 years. So the first thing you want, the date of your transactions and any receipts that are involved in those transactions. So pretty simple. The next thing is you want the value of your crypto in Canadian. So in Canadian dollars, because the CRA is not going to be doing conversions. They don't care how much it is in USD. They want to know how much it is in CAD. So do the conversion for them, because if you were to hand it all in USD, they probably would hand it right back to you and say, fix this. Also, your digital wallet record and any crypto addresses. So any of your addresses for different wallets that you have, keep a track of that, because they can actually, I mean, the CRA can actually take those and they can check on the blockchain and they can see every transaction. So when some people say, oh, they can't pay attention. Well, yeah, they can. All they need is that address and they've got everything. So it's just whether they look or not is the question.
So Candace, I mean, they could actually just, if we just supplied them a blockchain address or an address, right? They could actually just get everything without us having to worry. Well, no, they wouldn't, because then they'd have the conversion and the price and all that wouldn't really show. It would just, the blockchain transactions simply show the in and out.
They show the in and out. So they wouldn't have everything, but they would have enough information that they could pretty much verify whether you're being accurate or not in the rest of your information.
Fair enough.
Okay, so the next thing, a description and any parties involved in the transaction. In some cases, you may be making a transaction with somebody and all you have is their address. That's perfectly fine. Record that address. Exchange records. So all of the exchanges that you're on, they will provide you with records. You can get them monthly, yearly, but they will be there. Keep a copy of all of those, of course. And any accounting, legal fees, cost of software used for the tax management. Save all of this, because this can actually save you a little bit of money. Some of it can be written off. And that's where especially if you've got a good accountant, they will probably write off a lot of this for you too. So
thank you, Candace, for that information in part 1 of a 2-part series on crypto and taxes. Wow, a lot to digest. You know, that is a lot to take in and to consider, and kind of overwhelming because it's a brand new space and a brand new area that we really haven't had to think about in our tax sort of filings every year. We went over in this video crypto taxes, what they were, you know, whether your coins and your investment were sort of falling under a business income or a capital gain. We talked about the airdrops, the staking, and the interest, and developing your own crypto spreadsheet. Please remember that this is not financial advice, and we do encourage you to do your own due diligence in your own area, your country, your province, your state, and that it will, by doing this, help you in remitting your annual tax return. Please subscribe and hit the like button if you found that this has been some interesting information for you, and then hit the notification bell, because that's the only way you're going to get part 2 of this 2-part series. Again, thanks again, Candace, for your help. It was great to be able to get your expertise and your opinions in the area of crypto and taxes. And coming up in our next segment with Candace will be part 2, where we will go over taxable events, calculating gains, something that's called running average Coinbase. I have no clue. Got to stay tuned for that. And of course, we'll do a wrap up on some odds and ends. Thanks again for tuning in, folks. Talk to you soon.